Hey everyone, welcome to Breakout Wednesday for the 2nd of July 2025. It's currently 8 p.m. on the West Coast, 10 p.m. on the East Coast. First of all, remember, this is never financial advice. I'm not a financial advisor. This is simply a video blogging how one trader sees the market, and everyone needs to take responsibility for their own decisions. Right, let's just look at a chart of the All Ords. Okay, obviously the Trump crash with the tariffs, V rally, and all-time highs are waiting just here. Okay, having a very nice healthy little consolidation, and if that breaks out and we're in blue sky on the All Ords, then it's going to be obviously it's going to be pretty cool. That's a statistically a great time to be long. Obviously if you're already set with great positions, investments and stuff, then that to me is just hold the hell on. So let's wait and see. The longer it stays under here, the better. If the market could really cool down, because parts of it have been a little frothy. If it can really just chill for another few weeks until maybe this tariff deadline passes and all that, then we had a few shakeouts, that would be ideal, but we'll wait and see. Anyway, so bullish market still, little healthy consolidation, and let's just quickly rattle through some of these names that I'm talking about and stuff. CWP is respecting its 10 exponential. I'm just going to ride that at 10 exponential unless I have a huge push north, and then I might start bailing out. But really nice trade so far. Just these high, tight bases. And I just think, I don't probably talk about volume enough. I talk about volume drying up a lot, but I definitely think expansion of volume on rallies is vital, especially when you're looking at a base and a pattern. And I love the rally that forms the top of that base, right? So let's just call it this, move from here to here. Like that happened on big volume, and I think that's key. The best patterns tend to have that happen, right? And I'll start pointing that out a bit more. The hood trade, is just one of those outliers that's making really good bank, and I have trimmed a little bit, and I'm riding the rest. So, well done. I know there's a lot in hood. Good stuff, because it took some patience, and, that's a really strong uptrend, but even, it just goes to show the futility in looking at intraday data, which so many do. This just count how many days here. That's a week, that's 2 weeks, that's 3 weeks, that's 4 weeks. That's over 4 weeks, of patience. You can't tell me that looking at a 5-minute chart, and stressing has helped you, right? But it just seems that everyone, all these emails coming in, and I want 5-minute, 1-minute charts. I'm like, they are coming to Pro Trader, but my honest opinion is that it's going to be detrimental to the majority of people. Okay, it's going to be like Davis when he moved back to New York, and he was all that noises around, and he nearly went broke. And then he moved back on his dancing tour and locked out the rest of the world, and he made $2 million in the 60s. You lock out that noise and all that shit, all that tiny little movements, day to day, second to second. It really helps, right? EOL setup has not come into fruition, and this is why I love breakout trading. I don't care. This went down. Who cares? Do you know what I mean? I would have, if this broke up, I would have been in, but it broke down, so I'm not in. Okay, that's why I love, I just love this strategy. It's like when the market tips its hand, I'll jump in. If it doesn't tip its hand, I won't jump in, right? And so no biggie. The Interactive Brokers traders, had a big week last night, but is going really well so far. I got too many trades, to be honest. I mean, the IDEXX one, I don't know where my bloody lines have gone, but the IDEXX one I'm in, Interactive Brokers I'm in. I've got a few that got wigged, but I'm going to show them. So I missed this one. God damn, MFG. I was just waiting for a bit longer with this 200-day, but didn't get it. Nice increase in volume, so it's about double the, not quite double, but nearly double the 30 simple moving average of volume. So, yeah, look, it's a good base, isn't it? I mean, God, I just would have liked a little bit of a right-hand side little cup there. I mean, handle there, but whatever. Missed that one. PME, like, I didn't actually get into that. I was just, don't know why I'm waiting, but I still think that I might soon. I mean, I know it's whipped a lot of people here, but I'm just going to watch that. Then can they go back up and kind of close above this? I'll probably be I'll probably be getting long a few minutes before close one day. Okay, just assessing that. Okay, so I don't think it's just it's faked everyone, and I don't think it's a failed breakout necessarily. I'm just going to watch, and I'm going to try and get in that, and I'll probably post to the forum if I do enter. All right, PRN. Let's just go to some ones that have wick. Like PRN, like that's brutal for those with orders sitting there waiting. This is like, I'm telling you, like, there's nothing you can do about it. Okay, like there was nothing in this chart to tell you that might happen, other than having a crystal ball and being some sort of person who can tell the future. Like, it's impossible. You guys, it's going to happen every now and then. No biggie. Just get over it, right? And just move on. And so we'll chalk that one down as a little loss. What else was there? The Verizon one, right? I didn't take it because I'm just in too much other stuff. But I really did like that setup, and it's doing okay. Now, I just want to quickly, before I look at some new setups, right, I just want to quickly show some shit, right? I've talked about it a lot. Okay, how this is Reese, all right? You can see that I was looking at some stuff back here. You can read about it in your own time, but they expanded into the US market a few years ago. They're getting hammered in the US, okay? Their US business is getting absolutely pummeled, all right? I saw some people posting to various places about this setup, right, that I've drawn. And it's like, I get what you're looking at, and like, as I've said so many times, and like, I hate being too opinionated on it, because I know there's different opinions and I respect it, but I just think that really, if you're in this for the long term, when you're in something going down and it's below its 200-day moving average, like, these big gaps and drops happen way more often than when you're in a stock that's just trending up. Okay, yeah, you still get faked in and out in stuff in any name. Okay, but in terms of really getting your ass handed to you with huge gap downs and big days like that, it just happens so much more often when the stock is trending down below its 200-day moving average. I didn't invent this. It's like Paul Tudor Jones, a famous hedge fund manager, he's got this quote from like the 80s saying, bad things happen below the 200-day moving average. And that's because when stocks are below the 200-day moving average, they tend to be in the shitter, like they tend to have businesses that are getting hammered. Their margins are going down, their competitors are surfacing. Something under the hood is going wrong in that business, and it's really, really, really hard to know what it is. And that's why many of us love technical analysis, right? Because you just trust that what the chart's telling you, that the fundamentals are kind of hiding underneath that hood, and you just know because this thing's below its 200-day that something must be unhealthy, even if you can't put your finger on it yet because it hasn't hit the news yet. Okay, and like, the other thing is, I just wanted to point out Domino's. I was looking at Domino's today at like $14, and it's like, even like that degenerative gambling side of me was like, oh, maybe I should get some at 14. That looks so cheap, but I didn't, of course. But it's like, I got hammered in Domino's, right? Remember back here. Now, this is like one of the worst gap downs I've ever had, and I had, like, for me, that was a decent sized position. That was a hammering. That took me like 3 or 4 months to make that money back. Like, I try not to think about it. But that was painful. That happens to us all. And that stock, to be fair, was above the 200-day moving average, right? But if you just held that gap and just hoped, that gap down, I think I bailed on open there. Like, I don't know what it was, 45, 40, I can't even bloody remember. I'd have to go back, look at my P&Ls. But now it's at $16, okay? And it's been below its 200-day ever since. It's the 200 days sloping down, and bad things happen below that line. I just wanted to point that out because it just like it just amazes me how often people think that they're getting a great deal when the stock's below there, but you're really not, guys. If you want to play, this game's about playing the odds, and I just think there's so much money to be made, like so much money to be made in stocks, that are kicking ass, like have businesses that are kicking ass and that are just above their moving averages. I just don't understand why you would, there's so many potential cards and hands you can be playing. Why pick shit hands, when you can pick awesome hands and just be selective? Because Mr. Market doesn't, there's no gun to your head making you take trades. You can take one a month, one a year for no one gives a crap. Just when the odds are in your favor, I just don't see why you would be, why anyone would, bottom fish. Okay, I've ranted way too much, but it is probably one of the most important things when it comes to actually making consistent cash, right? So let's go to COG. Okay, this is just like this little kind of investment banking, capital market, financial stocks are doing pretty well at the moment. This is just base in here. It did pokey a bit above today. And I think the volume was up today too. It was kind of big today. So let's see how that goes. But I thought that was an interesting setup. I think it's been coming up in Dava scans and inside bar scans and all sorts of stuff. The other thing I like is like this setup, and I've talked about it before, this stock on and off before, that healthcare equipment space is obviously one of my favorite areas, and this is a big stock that some people argues overvalued with a PE of 59, and I just don't really think that PEs are relevant to anything. Usually most of the big winners in the stock market have high PEs, right? The big movers, okay? Like, what's PME's? PME, right? What's PME's? PE? 304, holy crap. So it's just, who cares what the PE is, right? Just factoring in huge growth, which is kind of awesome if you're trading breakouts, okay? So let's just go back to Fish and Parkle. I like this kind of wedge, okay? This kind of flush out wedge pattern. It's been this higher price has been rejected, and I'm hoping this just tightens up and bang, right? So watching Fish and Parkle, WTC, okay? This stock that got hammered due to, the director and the founder, I forget his name, the second, doing some dodgy shit. Obviously, yes, I do understand that was a good buy below the 200-day moving average, okay? And I'm not saying that my rules there before that I was talking about without faults, okay? Because obviously that was a good pickup. But now I just think that there's always opportunities still, right? Like now it's like come up and all these moving averages are converging, and now we've got a really nice tight base forming, and I've got good risk reward because I can get in with a tight stop kind of down here. And anyway, so that is something I like. And the only other thing, because I got too many trades and I'm holding tight on all of them, and I'm just hoping my account continues to grow a bit, is YUMC and some Asian stuff. Okay, so let's just look at Asia ETF back in the all-time highs. Let's look at not all-time highs, by the way. If you look at a monthly chart and go back years, it's I was in Asia back here, so that's how I know that it once got up to $14 and change. So okay, and let's just look at Barber quickly. All right, and it's like you can see after these fake outs here that that I was talking about back there's these classic fake outs, and then it's just these kind of falling wedge patterns, and YUMC. Anyway, just think Asia's kind of been quieting down. Tariff decisions are looming, and I thought the YUMC trade was interesting. I haven't looked at any of the crypto stocks in a while, but anyway, I don't know why I even clicked that one. That's it, guys. I'm gonna get out of here. Also, I am taking the kids camping next week and the week after. 2 weeks off. I missed very few weeks, but I've got a 7-year-old and a 4-year-old, and to be honest, I just want to check out for 10 days and do jack shit other than camp and play with the kids. So I will see everyone in 3 weeks. Cheers, bye.